So it's 1:30, so we're going to get started. So we are joining you today. We've got John Briggs with Spencer and I today, and hopefully answer some questions, clear up some confusion, or maybe we'll add to your confusion, who knows. But thank you all for joining us. We really appreciate it. One thing I like to get out of the way just at the beginning is our disclaimer. And a couple of us are attorneys and a CPA, and we offer advice all day long. But for this webinar, this is not advice particularly for your situation. This is just, we're dealing with hypotheticals. We are not creating an attorney-client relationship with any of you. If you have specifics, I highly advise you to contact an employment law attorney or one of us to help you go over your specific business circumstances, because your business is going to be different than the business next door. So thank you again for joining us. We're going to quickly introduce ourselves. I'm Dana Ball. I'm a small business attorney here in Utah, and I work with small businesses, keeping them compliant with their employer obligations and doing contracts every day and entity formation. So I'll pass it over to Spencer and then John, and then we'll dive right in.
Okay, for Spencer Phillips, I'm the owner of Employer Lawyer, a small law firm based here in Utah Valley. I help with HR employment law issues for my business clients. I work both with businesses and with individuals. I do consulting and litigation. And my goal is, when working with businesses, is to help them stay out of trouble with their employees.
I'm John Briggs with Insight Tax. We are an accounting CPA firm located in Sandy, Utah. I mean, at the end of the day, I think the world is better if people keep money in their own pockets instead of giving it to the government. And there's no bigger bully, in my opinion, than the IRS. And so we like to protect team members we like to protect our clients from being bullied and keeping more money in their pockets.
Great, thank you. I agree with that. So we're going to get started with Spencer offering a brief overview of the Emergency Paid Leave Act, and then we'll cover, each of us have a few highlights to cover, and then we'll dive into questions.
Excellent. And before I do so, we've got a comment in the chat box from Deanne Adams that some of the sound is not coming through. So if anyone else out there is having trouble hearing us, or maybe just hearing one of us, please let us know. We'll try to work some technological magic behind the scenes to make sure you can all hear us pretty well. So I'm going to give just a short overview of the Families First Coronavirus Response Act, which was passed by President Trump a week ago Wednesday, actually so 2 weeks ago from today. And this is the law that set up paid sick time leave and paid FMLA leave. So Dana and I especially, have been fielding questions from employers about this law for 2 weeks now. And it's been changing as we go. And I think things are starting to get a little bit more settled, given that today is April 1st, which is the day that the law actually kicks in. So it is in effect today. We do have a couple-week waiting period, or essentially a non-enforcement period. It was going to be 30 days. The Department of Labor changed that and shortened it quite a bit. But the goal right now is to know that it is enforceable starting today. And any questions you have, reach out to your employment attorneys, reach out to Dana or to I, so we can get those questions answered and make sure that you are implementing all parts of the law and you're not going to have to worry about risk or liability down the road for non-compliance. Okay, so what does the law do? It sets up the paid sick leave and the paid FMLA. I'm going to first touch on the paid sick leave. One thing that has come up a number of times with people reaching out to me is who is eligible for this leave. It is any employee. There's no requirement that they have to be an employee with your company for a certain number of days. On the FMLA side, there is, but for the paid sick leave, everyone is eligible if they are unable to work in person or remotely. And then there's a list of circumstances when the inability to work would qualify them for benefits. And the first three are that the government has ordered them to stay home, or second, that a doctor has ordered them to stay home. The third one would be that they're sick and they're experiencing symptoms of the coronavirus, and for that reason, they also cannot come to work. For those three reasons, there's pay eligible for those employees up to $511 per day, $511 per day, and it is capped at $5,110 over the course of 2 weeks of paid leave. If the other reasons apply, if the employee cannot work in person or remotely because they are caring for someone else who is sick with symptoms of the virus, or if they can't work because they are taking care of kids who are unable to go to school or to a formal daycare provider, they are eligible for 2/3 of their rate of pay. And so that's something that is a little confusing, and it wasn't exactly clear in the poster that the DOL put out there and asked everyone to post in their webs or in their job sites and email out to their remote workers. But it is the fifth and sixth, or the fourth, fifth, and sixth reason on that chart. The pay is not at the full 100% of the rate of pay, it's at 2/3. And that is capped at $200 over the course of the 2 weeks, $200 per day, or $2,000 over the 2 weeks. Dan, anything to clarify on the paid sick leave before I jump into the paid FMLA?
No, go ahead and jump right in.
So the paid FMLA is much more narrow. It is only available to employees who have been with the employer for 30 days. So if you have an employee who's been with you for less than a month, they're not eligible for the paid FMLA. Paid FMLA is 10 weeks at 2/3 of the employee's rate of pay. And again, this is another place where there's been some confusing information out there. The poster says, I think the poster says $12,000. I've got it right here, or on my desk here. There's a $10,000 limit for the 10 weeks of 2/3 pay, okay? The reason sometimes you'll see 12,000 out there is that reason of staying home, being that you've got kids at home from school or daycare, that qualifies you for up to $2,000 of paid sick leave, which would be the other 2,000 to bring it up to 12,000 total. And again, the FMLA is only available for people who cannot work in person or remotely, and the reason has to be because they are staying home to take care of kids who are not in school or daycare. All right, so that's a quick overview. Deanna, do you want to turn the time over to you then?
Well, so John, I'm going to have you highlight tax credits and these business loans that have come down, and then we've got a couple of highlights about unemployment, and the IRS just recently defined what type of documentation is required. So we'll go over that too, and then jump into questions.
Okay, so first let's go over the tax credits because that pairs nicely with what Spencer just covered. Because the law requires you as the employer to actually pay them, they are going to reimburse you 100% of what you pay, whether that's the sick leave or the medical leave, whether it's the, like I said, whether it's the 2-week one or the 10-week one. Any one you pay, the government will reimburse you 100% of the wages you paid, which includes the payroll tax that you would have on that as well. That reimbursement, that credit, as they're calling it, is going to be applied for on the 941 payroll filing form. I mean, it's pretty straightforward. Other than that, that's the tax credit. You get it on the 941. What's not as straightforward, it seems like, at least based on the confusion out there, is how does this apply to self-employed people?
Yeah.
The same rules that Spencer just went over is the same things that apply to self-employed people. If you are unable to work because you're sick, you can be reimbursed for pay that you basically lose for a 2-week period, up to the same limits that Spencer talked about, the $511 a day up to the $5,110. Same thing on the medical leave thing. If you have to be at home for any of these reasons, you can be reimbursed up to $200 a day, up to the $10,000. The calculation difference, though, is because it's always a lesser or language, meaning $200 is the most that they'll give you a day. If you have to, what do they call it? Your average monthly self-employment income is what they're calling it. That is calculated by taking your gross revenue for the year, subtracting out your business expenses as you file it on your tax return, and dividing that number by 260. Why they came up with that number, I don't know if that's like 365 minus all the weekends. I think that might be what it is, but you divide it by 260. If that amount is less than $200, then it's the smaller amount. If that amount's more than $200, then it's 200. What that means, based on how I'm looking at the law, because we won't actually know how this plays out until we file taxes for 2020, which won't happen until next year. If your business runs a loss, you won't get any credits. because a negative number divided by 260 is a negative number, which is smaller than 200. So really, it's like they're going to give you a tax credit if you're profitable, but if you're a failing business, then you're not covered. That's the way I currently read the code. They have not, I mean, they didn't say there's a minimum number less than 200. So that's the way I look at it. And again, a self-employed person is going to get the credit on their income tax return. Businesses who pay employees, you're going to recoup the credit each quarter when you file the 941s. A self-employed person is going to have this as a income tax credit on their 1040 tax return. Because that's so far out, I don't know how the IRS is going to handle treating the actual calculation of that credit, again, if they're going to look at the loss or anything like that. So that's the credit side. On the loans, this is the biggest hot topic because it became law last Friday. And I'm sure myself and other accounting professionals around the world are being inundated the same way I am. Let me just give you a brief summary of the two types of loans, because technically the economic injury disaster loan has existed for a few weeks now. It's the Paycheck Protection Program loans that are the new ones, but you really want to understand both, because typically the questions we're getting are, which one should I apply for? So the EIDLs, which have been in existence, you apply for those through the SBA's website, and you get that directly through the SBA. If you tried to apply for this a couple weeks ago and got disheartened, good news is, as of this week, they've simplified the application process online. And if you go back and look, it is a much simpler application, super quick. They ask for the most basic information, and that's it. And at the end of the application, and I'll get into this a second, is where you request the $10,000 advance. Because the law says they will give that to you within 3 days to hold you over as they process the actual application. Those are the EIDLs. Those can be used for effectively any business expense. I don't know if some of you were like me. When I first heard about this, I thought, holy crap, a loan at 3.75%. Yeah, I'm going to try to refinance all my other debt that's higher than 3.75% and just use this loan. Mm-hmm. They were very clear that refinancing loans is not an approved use of those funds. You will be in severe trouble if you try to do that. So looking at their rules, the simplest way to say what the EIDL loan can be used for is business expenses. Now you have the Paycheck Protection Program. These loans are going to be offered through your banks, not through the SBA. And as of this morning, the SBA has said they will start processing these loans as of April 3rd, which means banks are trying their hardest to get applications out so that you can fill them out and they can start processing these as soon as the end of this week. Again, those are through your bank. The Paycheck Protection Program loans are the ones that are potentially forgivable. If you were able to get the loan and you use it for the clarified or qualified expenses that they list out, which is effectively payroll costs, mortgage interest, rent on a lease agreement, and utilities. If you use it for one of those purposes, they will forgive the loan. The max amount you can get on a PPP loan is 2.5 times your payroll cost. Now, the law says, and when I say the law, I'm talking about the 880-page document. That law says the payroll costs will include things such as wages, commissions, other similar compensation, which we're waiting for further guidance on what they actually mean by that, and payments to independent contractors and self-employed people. So if as a business you are paying sole proprietors or independent contractors, those are included in the payroll cost calculation for the PPP loan. The application that the SBA put out last night gave instruction on how you're going to calculate your payroll costs. If you're in business all of last year, you will use your 2019 payroll costs and divide it by 12. That number is your average monthly payroll cost. You multiply that by 2.5. That's the most amount that they're going to give you in the loan. If you are a seasonal business, I don't remember the exact dates, but it seemed like it was something like February to August or something. You can use a 6-month period to calculate your average payroll cost. If you are a brand new business this year, and to qualify for the loans, you have to have been in business by February 20th, I believe. If you're a brand new business, you'll just use your current payroll cost since inception. Those are the ways that the application is currently saying how you're going to calculate that. And again, it's 2.5 times what that average monthly thing is. You get the funds, assuming you use it for payroll costs and the other things. We will receive guidance on what they want from you to prove that you actually used it for those things, and then they will forgive the loan. So those are the basic rundowns of the two systems.
So I'm going to ask a question. So I know with the PPP one, they're saying that you have to use it within 8 to 10 weeks or something like that. Can you talk about that?
Yeah, so the 8-week period that is being referred to is from the date you receive the loan. They will look at your expenses or you will use your expenses over the next 8 weeks to qualify for the forgiveness aspect. So the loan proceeds need to be used in that 8-week period on payroll costs, mortgage interest, rent, and utilities. Now that being said, the SBA application also said because of their anticipated high volume of requests on this, you can only use 25% of the loan on the non-payroll expenses in order to get 100% forgiveness. If you end up using more than 25% of the loan to cover mortgage interest, rent, or utilities, and there's another one that I can't remember off the top of my head because it's so vague or not applicable. If you use more than 25% on those 4 categories, you won't get 100% of the loan forgiven. So the 8-week period is referring to that aspect. And
will it be retroactive at all? Like they could go back to last month's and cover that payroll if they had payroll? So I'm thinking of these dentists or other companies that have ceased operations and they don't have a current payroll and they're not going to have one for maybe 4 to 8 weeks.
Well, so the retroactive aspect relates to how much is forgiven, not necessarily can I go back and use the loan funds for that. If that is the case, there's nothing clearly stated about that. I just know, what I do know is that once you get the loan, those businesses would rehire those people immediately so that they can pay them for the next 8 weeks. That's the real motivation of the government by offering these things, is to keep people employed. I mean, I was thinking about this. The reality is all these things, the tax credit and now this triple P loan, it's really just another form of unemployment. They're just trying to keep people having the ability to put food on their table. Right. And instead of bombarding everybody through the unemployment system, there's these other options of tax credits and triple P things where people can effectively help with the unemployment scenario. But yeah, so those businesses would hire back those people in order to have the amounts forgiven.
Okay. All right. Well, we'll jump into your questions as we get done with our highlights. So Spencer, do you want to cover unemployment stuff? Because I know the CARES Act did go over some unemployment. And
so I'll take just a few minutes to talk about unemployment. I'll spend a little bit more time rather than this quick summary I gave for the FFCRA, just because this is new for those who have been a part of our previous calls. So the CARES Act does have, because it is a stimulus package, they are providing, there's language in there, providing additional federal dollars to help bolster or boost up the benefits that are available to employees through their state unemployment agencies. The problem is, and it says right on for example, our Utah Unemployment Insurance website right now, in big bold letters, they say, even though the CARE Act is passed, these benefits are not yet available, and we're waiting for further guidance from the DOL about how we're supposed to administer this program and divvy out these dollars, which has been what we've been telling people for a couple of weeks now, is the DOL and the other agencies involved are constantly figuring out, well, what else do we need to tell people so they know what to do with this money and with this new law? So it's changing frequently, but the good news of what we think we're going to be seeing is an additional $600 or up to $600 on a daily basis for people who apply for and qualify for unemployment insurance benefits through the state. So as of right now, despite some interesting stories about what has been said out in the news, the state's unemployment insurance website still says that the maximum daily benefit is $496 per day. And it's really based on a complicated math formula that looks at the number of dollars you've been earning, the quarters you've been working, and they run it through all these formulas and they figure out what the benefit amount is. Assuming somebody's able to qualify for the $496 per day maximum benefit under the state unemployment insurance law, it's possible that in the very near future, they will also qualify for an additional $600 per day, which with my calculations put that if you could get that over the course of a year, it's not available that long, but that's essentially about a $56,000, $57,000 salary level. So there's a fair amount of money that is much more so than people have ever been able to get in the past. Okay, the CARES Act specifies 3 different benefits. They call it in a very complicated way, benefit 1, benefit 2, and benefit 3, okay? Benefit 1 is the $300 that we were just talking about, the extra $600 that will soon be available and may be made available by the federal government to the state unemployment agencies. The trick with this is it's not through the end of the year. We've been talking a lot about how this paid sick leave and paid FMLA starts today and it goes till the end of the year, December 31st. The extra $600 is only available through July 31st. So it's very short term. Starting in August, people will no longer be able to qualify for or receive the additional $600 in daily unemployment allotment from the federal government. Okay, that's benefit 1. Benefit 2 is called pandemic unemployment insurance. And what this is an additional 39 weeks. Maybe I shouldn't call it additional. It is 39 weeks of unemployment benefits that is made available to people who are self-employed or those who have exhausted their regular and extended benefits. So there's more information coming about that one, but essentially they're authorizing additional dollars to people who maybe otherwise would not be able to get benefits or they have run out of their benefits. And then the third one, benefit 3, and it sounds almost the same, the pandemic emergency unemployment compensation allows for an additional 13 weeks of benefits after normal benefits have been exhausted. So it sounds a little bit repetitive. There are some differences in there, but I think at this point where we don't have much guidance from the DOL about how this is actually all going to work, I think the key thing to take away for business owners is there's a lot more money available for employees through the unemployment program than there ever has been. Now that doesn't mean that that's where they should go because of these grants, or I shouldn't call them grants, these loans that are available that may turn into grants depending on how the money is used, may allow people to still stay at work. And like John was saying, put money on the table and feed their families. But for those people who are not able to work and their businesses have been shut down temporarily, permanently, whatever, there are benefits available through the state. And on the state's website, they are clarifying that people who in the past were not eligible for unemployment benefits are still encouraged to apply. And depending on the circumstances of why they're not working, if they are furloughed or if they and their employer have come to an agreement that for health and safety reasons, they're going to take a couple weeks off, those people are encouraged to apply. They will be viewed and analyzed on a case-by-case basis, and they very well may be able to qualify for benefits when they wouldn't have been able to do so in the past.
And so are we still unsure how employers will be handled if they go file for unemployment?
No, there's a bit more clarity on that. And so let me just read a little thing that I took off the website that was just updated on Monday. And the Department of Labor, Department of Workforce Services put this answer. I'm just going to read the Q&A because I think it's right on point with your question, which is really important, Dana. It says, I was notified that a former employee filed for unemployment, but I was not the employer. Oh, let me back up. I'm sorry, that's not the right one. I've got so many things highlighted in here. I apologize. Okay, I'll explain to you what they said rather than actually reading it. In the past, when employees apply for unemployment and they are found eligible and they start getting benefits, those benefits can be counted against the contribution for employers who contribute on a quarterly basis. Their employment or their UI contribution rates can go up over time depending on the number of people who file claims and are found eligible and receive benefits. These claims that are being made during the COVID-19 pandemic are rather than causing employers' contribution rates to rise, they're actually going to go to what they call social costs, which is a much lower percentage of change to the employer's contribution rate. So what I've been telling businesses is, yeah, if you have a lot of employees, if you shut down for a couple of weeks and everybody goes and applies for unemployment, there may be a little bit of a change to your contribution rate, but it's not going to be anything like it would have been in the past, where they would all be charged against you at the full rate. This is going to be a significantly reduced change to your employment contribution rates.
That's great news. But what about for the business owner who wants to go file for unemployment? I have yet to have anybody tell me they've tried it, so I would love to hear how that goes. If any of you,
I know several people have tried it,
yeah.
but I haven't heard back on whether that has been approved. My sense from reading through all of the Q&As that are on the Department of Workforce Services webpage is that anyone who is out of work, whether they're a business owner, or especially for those who pay themselves as a W-2 employee, anyone who's out of work should go and apply. The worst thing that's going to happen is they'll say no. And so there's really no harm done by applying. And so I have actually told several business owners who have closed down, who paid themselves as W-2 employees, to go and apply and give it your best shot and see what happens.
Okay, well, thank you, Spencer. So I am just going to cover quickly the documentation needed to request the emergency paid leave. On Friday, we thought we had this figured out. The DOL had told us, but we still don't. We didn't. They retracted what they had put in their Q&As, and now we go to the IRS, and I'll send out the link. But the IRS issued some FAQs, and it's really long if you want to have some interesting reading. But this is summary. Here's how it goes. The employer needs to receive a written documentation, so a written request from employees to take the emergency paid leave. So you have to show, the employee has to show that they qualify for the leave. So you have to have the employee's name, the date, or dates for the leave that's requested, a statement of the COVID-19 related reason the employee is requesting leave, and written support for such reason, and a statement that the employee is unable to work, including by means of telework for such reason. So this is going to fall back. I've had a lot of employees reaching out in the last couple of days. So whether you're an employer or an employee, there has to be some sort of written documentation with these 4 things by the employee, whether the employer provides a form to fill out or not. The employees, you need to submit a written request. A couple of things I want you to know: if you are taking emergency FMLA or sick leave to care for a child, they've added in there that both parents have to be unavailable to do this. And well, if both parents are around or someone else can care for the child, then you do not qualify for that type of leave. And then also they want to know how old the children are. So if they are 15 years old and older, then you have to explain what the special circumstances are that you actually have to help them and care for them. Then we've got what the employer will have to document. So there is a list of different copies of what you need to use to determine that the employee was qualified to take the leave, and you need to keep all of this documentation for 4 years. So just remember that. We don't want you to get stuck not being eligible for those tax credits. So, okay, let's go to the Q&A and let's just start hitting them.
And I think the first couple are probably great things for John to take a look at and see if he's able to share some of his wisdom on these ones, and more tax related.
All right, John, are you aware of any monies being provided by the feds to compensate employers for lost revenue?
Not for lost revenue, but that's effectively what these loans are designed to do. as you lose revenue, they're giving you funds to still be able to handle expenses. Like in general, when I think about these two loans, it's really great. The EIDLs, like it's not a loan that's going to be forgiven, but it's a great interest rate, it's great terms, and the PPP loan is phenomenal because you can just have the debt forgiven. I don't want us to lose focus as business owners that you still need to be looking at your expenses. Cut back on the expenses that aren't productive right now. Don't look at this as like, oh, cool, I can like business as usual because the government's going to give me a great interest rate on a loan or free money. Like still try to get your business stuff in place. So the loans don't necessarily replace lost revenue, but they do allow you to cover expenses that you wouldn't be able to because you've lost revenue.
Okay, which quarterly taxes are employers eligible to take the tax credit from? FICA, MCARE, employer share only. Also, if we qualify for the quarterly tax credit, will we pay our FICA and FUTA every 2 weeks? How do we take the tax credit as we pay it?
Okay, so I know Social Security was listed specifically, which is the FICA. I did not see anything on FUTA, your federal unemployment tax rate. There might have been a Medicare. I don't know off the top of my head. I'd have to relook at it. But you take it's all in the 941, and the way it works is you basically, and this is where you're going to have to get your payroll company involved, because you know that if you're paying these sick leave, sick paid, or just medical leave stuff, that you're going to get that money reimbursed. You can reduce what you deposit for the payroll tax portion. So if normally I paid $100,000 in wages during the quarter, theoretically I'd have to send a $15,000 tax bill with that. I know that there's X amount, say there's $10,000 of wages I paid during that quarter to qualify for these credits. I would only send $5,000 instead of the full 15. You're going to need to rely on your payroll company to help you with that process, because honestly, that's all in their back end. And I'm sure they're working on how you check if wages, things that fall under these new laws or not. But effectively, you don't have to fund it. You don't have to pay the full amount and then hope for the refund later. You can basically take the refund up front so that you break even when you file the 941.
So John, in the last couple of webinars that we've done, we've had questions from employers who file their payroll weekly or more often than quarterly. So how does it work for them?
So just to be clear, you only file your 941s once a quarter, but depending on how much you pay, you are required to send the payroll tax deposits either like within 2 business days or by the week. So I just want to make sure that's what we're talking about. The 941s are always quarterly filings. So again, your payroll company should be helping you with that math, because you wouldn't want to be sending the full amount that you're used to sending if some of those wages are going to get reimbursed.
Okay. Okay, most of these are going to be for you, John, so I hope you're ready. Rich has a couple of questions. The first one, let's say we have employees who are paid on commission only. However, when they take vacation, they are paid $18 an hour for each 8-hour vacation day. Can we use this hourly based rate to compensate them with sick leave pay instead of calculating their actual regular rate of pay by averaging the commissions over a 6-month period?
Deanna, if you've got a strong answer for that one, I'm happy to hear what you say. I've got my idea on it, but I'm not based on any particular guidance from the DOL just yet.
I would say, I mean, based on what you just went over with the documentation, how the DOL you said had one thing and then the IRS came in and said, we're going to make it more stringent. And as you were saying those things, I'm thinking to myself, yep, that's what the IRS does. They are going to try to screw you. I would personally go through the work of figuring out what is the average amount that person was paid and not just take the $18. Yeah.
It's
I
probably,
take
I
the full
think I
amount.
agree, John. That's probably a safer way to go. And if you do, now I'm not great at math, but I pulled my little calculator up here. That's like $384 a day is equivalent to $100,000 over a 260 work day or days of work during the course of a year, which is 5 business days for 52 weeks. So that still puts them underneath the limits that the paid sick leave and the paid FMLA leave authorize. I may have just misspoken. Isn't there a $200 per day limit under the emergency FMLA? Is
There's
that right?
200 for, yeah.
Yeah, so for those who are eligible for paid sick leave under one of the first 3 reasons for eligibility, the government or medical mandate to stay home, or they themselves are sick with COVID-19 symptoms, $100,000 regular rate of pay over the course of a year would still actually put them underneath the limit that the paid sick leave will authorize reimbursement dollar for dollar for any benefits paid under that paid sick leave benefit.
Okay, so what if they've earned over $100,000 in the past 12 months? How does that affect these calculations?
Yeah, well,
So,
go ahead, John. Tell me your thoughts.
what I've seen, especially because that was a big confusion with the loan questions as well, is like, do I have to exclude everybody who's 100,000 or not? The SBA application that came out last night shows that it's up to 100,000. So if I pay someone 150,000, I'm looking at their payroll cost at 100,000. I have to exclude the 50. I don't have to exclude them completely out of my calculation. So my guess would be it's going to be the similar treatment on the tax side. You're going to get reimbursed up to $100,000 to pay.
Okay. Spencer, do you want to take that question, the next one?
Well, the next one, it starts off FMLA, but it also, I think it may pull us back to John. Again, John, we're glad you're with us today. I'll read the question though. Since employers are being reimbursed for paid sick leave and FMLA, are we deducting our expenses from our payroll taxes, or are we paying our full payroll taxes and then filing for reimbursement to be paid back to us? Just not sure how this is going to work. So, John, what's all your take on this?
You're going to basically take your payroll tax number, subtract out the expenses that are going to get reimbursed, and send that amount. So the net amount, if you will. Exactly.
And I think what we've also seen in the guidance from the DOL is that if the benefits paid under the emergency sick and the emergency FMLA are more than what they're submitting as their payroll taxes, they can then turn around and request a reimbursement of that additional expense, so that at the end of the day, they should be put in the made whole position.
Yeah, and I look at the 941 at this point to basically help the business owner reconcile what they planned on getting reimbursed and what they actually end up getting reimbursed.
Excellent.
Yeah. Okay, here we go with the PPP loan. To calculate average payroll costs, can we add simple IRA match contributions? What about workers' comp insurance and healthcare premiums?
I have not read anything in the law that allows you to increase the amount by the match contributions or by workers' comp or healthcare premiums.
Okay.
Okay, this is an unemployment one. I'll take this one, Dana. I started my company at the end of 2019 and have shut down temporarily. I applied for unemployment. However, I was told that I don't qualify due to exhausted benefits. Will benefits be extended and when? So, of course, there's probably a lot more we need to know to really give a clear answer on this. But for this particular question, I would say, if you applied and the benefits are exhausted, it doesn't mean that the state's pot of money for unemployment benefits has been exhausted. It may mean that based on your work history over the last 5 quarters and how the state calculates benefits, that there may not be any benefits available for you just yet. The new CARES Act is authorizing additional benefits, but we don't know exactly how and when those dollars are going to come yet. But that is something that will be probably updated in the very near future on the Department of Unemployment Insurance website. So I would just continue to check in on that website, and when those extra federal dollars come in, that also may allow you to begin or continue collecting benefits from the state.
Okay, I'll take this one. Where can I find the documentation requirements for employers for FMLA and sick leave? So it's, if you just Google the IRS, I'll have the link up on my blog, and then I'll send it with the recording of this webinar, but it's the IRS COVID-19 related tax credits for required paid leave provided by small and mid-sized businesses, FAQs. So if you Google that, you'll find it. It's under section 44. It's FAQ 44 and 45.
Excellent. And we got a couple of John questions coming up here again. John,
Yeah, I see them. So the triple P loan can be used for up to 8 weeks of eligible expenses, question mark. So you can use the loan for expenses as long as you want. The 8-week period is the period they're looking at to determine how much of the loan they're going to forgive. So I plan on getting a triple P loan, and I plan on using all of those expenses or all the loan amount in an 8-week period. So 100% of my loan is forgotten. And what I saw, I haven't mentioned this yet, it looks like they're giving you a 0.5% interest rate, and it's going to be a two-year term on those loans for any expense that isn't forgivable. Okay, I see the next one. I understand the triple P expense requirements, and if the business doesn't use the money correctly and in the right amount of time, those amounts will not qualify for the forgiveness. Good, okay. Do you know what the interest rate is for the triple P for the unqualified portion? Yeah, 0.5% is what they're saying. I haven't seen solid info on that component of the terms of repayment. So it didn't come out until they came out with the application, sample application form last night, where they started listing. And there's a new link today through the SBA website. It's sba.gov/funding programs, loans. I mean, if you go to the SBA site, you'll find it. But that's where they are currently laying out what I just told you. 0.5% interest rate, 2-year term.
So John, I have a question here from a friend of mine. We were just chatting yesterday, and I said, listen, I'm not sure I know the answer. Why don't you join us for our conference call tomorrow with Dana and I, and you can ask John himself. So the question from Jeremiah is, I'm an owner of a company. I take a check only so I can pay some taxes throughout the year, and then I take an owner's draw for personal expenses, such as a truck payment. Can I use some of the triple P loan to pay for those expenses? And can I up my personal check if I go and claim unemployment?
Okay, let me start with the first one. Can you use the triple P loan for those expenses? Yeah, and you can. It might not be forgivable though. That's the thing that we're looking at with the triple P loans, is how much of it is going to be forgiven or not be forgiven. What is not clear still, and we are waiting for guidance from the SBA, for sure, if you're an owner and you have a portion of your pay that's through a W-2, I know that that is going to be covered as payroll expenses. The law says, and similar compensation, I'm hoping one of the things that they say as part of that is when owners take a draw for their expenses, because that is in fact payroll for us. And if we're able to protect our paychecks for employees, why can't we protect our paychecks for ourselves? That's the way I'm looking at it. If you think through it in a different way though, if I have the funds to pay my people and then I get a loan and I use those loans to pay my people and then that loan gets forgiven, theoretically I have other funds that I didn't have to use to pay them that are now available for me to use for other things. And you would basically use that money for things like that. Can I up my personal check if I go and claim unemployment? Do you want, I don't quite understand that question.
Yeah, I'll weigh in on that one. So part of the discussion, and I think this is an issue that a lot of people have, is it really comes down to how they're paying themselves as a business owner. And how long they have been paying themselves, for example, as a W-2 employee, if that's the case. And the amount of benefit that an employee or a former employee might be able to get really comes down to looking at how much money they've been putting in through unemployment insurance contributions out of their checks over the last 5 calendar quarters. And then they run the math and they figure out if you're eligible and what your benefit might be. And so I again, am encouraging anyone who is out of work, whether they were an employee or a business owner, that if they have been paying into the unemployment system, to go and apply for benefits, and the worst thing that can happen is they say no.
Your comment triggered an experience I had with another client, so it might be a little unrelated to this, but I think it's worth mentioning. I had a client ask, well, I've typically paid myself, $50,000 on W-2. Should I increase that right now so that I can up to $100,000 so that I can get that much paid to myself that then would be forgiven? My response to him was, I don't know the mechanics of how the loans are going to work, but to me, that smells pretty fraudulent. And so I personally would stay away from something like that. I would not want the IRS to come in, because they're, and it's not even the IRS, but it might be, they're going to require good documentation on this. They're not just going to take our words. Oh yeah, no, I totally use it for payroll. They're going to want proof. And if somehow in that process, they're able to see that historically I paid myself 50 grand and now all of a sudden magically in March, I increased my payroll, I wouldn't want that. I just wouldn't recommend that route for people.
And John, what I think is the problem they would also run into if anyone was going to go that route is that just kicking your wages up very recently, for the last couple payroll periods or whatnot, is really not going to have a big effect on what your total eligibility is anyways. We're talking about anyone who gets the full amount of state benefits and the federal benefits that are coming. We're still looking at a $50,000, $60,000 salary range. I mean, it's helpful for a lot of workers, but for business owners who may be able to pay themselves a significantly higher wage than that, it's really not going to turn around and give them that much more benefits through the unemployment system.
Yeah.
Okay, so somebody is asking if we can go over the 4 requirements for employees to list to take the 2 weeks again. I certainly can do that. So the employee's name, the date or dates for which leave is requested, a statement of the COVID-19 related reason, the employee's requesting leave and written support for such reason, and a statement that the employee is unable to work, including by means of telework for such reason. There is a little bit more depending on the type of leave that you are taking, and if you've been ordered to quarantine, you need to show proof that you were ordered to quarantine and who gave that order. And then I think it's not clear exactly what they're asking when they say statement of the COVID-19 related reason the employee is requesting leave and written support. Does that mean a doctor's note? We don't know. So it's all on your best, what you feel is good right now.
And I'm going to throw just a sort of a follow-up question to you based on what you were just sharing. It's something that's been coming up, and I'm not sure I know exactly what the right answer is, but what is the difference between being ordered to quarantine versus having a stay-at-home order that is not enforceable by law versus one that is being enforced as a potential misdemeanor? Like, how does that all work?
I don't know.
It's typical IRS, man. I'm telling you, they come up with these rules and it even gives themselves more work because they're going to have the same problem.
That's true.
And one auditor or one person who processes it is going to interpret it a different way than the other. Oh my gosh, what a nightmare.
It is a nightmare. I'll tell you, Dana, what I've been sharing, and I would love your thoughts on this if you have a different perspective. For the employers that I work with that are based in Summit County, and those who are based in Salt Lake County, if they're not one of the essential businesses that has been allowed to stay open, or if they're, those are the 2 places in our state where people are really being under the force of law, being required to not go to work.
Right.
Those kind of cases, all of those employees, if their business has not previously shut, or if they're still operating their business online, but the employee just can't come in and they can't work remotely, they very well may be eligible for benefits for the paid sick leave benefits because they've been ordered by a government authority to stay home. But in, for example, Utah County, where there's the governor's order to try to stay home and social distance, but it's not really a strict order of quarantine with the force of law, I don't think employees in Utah County have the ability to get paid sick leave benefits under that first reason of a government order.
No, I agree with you. I don't think they can either.
Yeah, and not changing soon, but as of right now, I think it's Salt Lake County and Summit County.
I think all we can do is just document as much as possible and hope that it's going to be okay.
Exactly.
Okay, somebody asked, is this a good time to start a business? What do you all think?
I was kind of laughing at that question too. There probably are, anytime we go through a tough situation like we're facing as a state, as a country, and in our businesses right now, if we look hard enough for it, there are silver linings all over the place. There very well may be good reasons for starting up a business right now, especially if it's a business that doesn't require a storefront. An online business or a way to start attracting new customers for a business that's already running. Or for like you and I are doing, Dana, this has been great to just do outreach to business owners. And that's really good to help them develop those relationships with us and with John today. So there are ways to make some good things come out of this crazy situation that we're in.
Yeah, so when I read that question, I thought, oh, maybe that's a tongue-in-cheek question, someone trying to be funny. Because I think a lot of people, on the surface, you'd say no, but I'm an optimist, and I look at this and I think there's actually lots of opportunities. From a CPA firm standpoint, now more than ever, we need to be offering a service where we help owners go through their businesses and how do they create a 13-week cash flow plan, and how do they analyze their expenses and determine, like, that's an additional service that wasn't necessarily on everybody's mind a while ago, and that there's value there, so value should be exchanged. I'm a 50% owner of a gym, and we've had to close our brick and mortar location. Well, guess what? We effectively are starting a brand new business by having online virtual workouts and personal training. I was just on another group today with some high-level business owners, and they were talking about, look at the landscape of how education has changed. They're predicting when this is all said and done, there's going to be at least a portion of parents who are like, you know what? I don't want to send my kids back to public school. So there's an opportunity to provide virtual education. We know there's already a market for it with companies like Kumon who do the reading and math stuff, but why not a full, more engaged, like one-on-one, like private education that the kid can get in-house under like a better scenario than maybe going to school and worrying about bullying. I think there's so many opportunities out there. If you have an idea that can serve problems that are currently existing, I say don't be afraid to go for it.
I love that. And I think that because we have such a downtime right now, it sometimes takes a lot of energy and time to ramp up a business. So I say take advantage of this downtime and start getting your stuff going and figuring out what you need to do if you do have a business idea. Take advantage of the time you have right now to get that going. You
guys have downtime? I've been more busy since this started.
I don't have downtime, but all these other people, my husband has downtime. We'll put it that way. Some of us do have downtime, but some of us don't. Okay. Deanne asks, is similar compensation considered distributions on a K-1?
It's unknown right now. We're hoping when they start processing loans by the end of the week that they will clarify that. And the banks, I have heard from some people based on the application their bank has given them that they are asking for owner draws, which would be basically effectively the same distributions from a K-1. So I don't have a 100% answer for you, but some banks, it sounds like, are looking at that info.
So she then did a follow-up. Are the same rules for greater than 2% shareholder on either of the sick or child reimbursement for the payroll tax credit?
Yeah, so I haven't seen anything that excludes greater than 2% shareholders. It's an interesting question, the way you word it, because yeah, there's so many things in the tax code. But like, here are these really fun benefits. Oh, unless you're a more than 2% shareholder in an S Corp, you're screwed. I haven't seen any sort of attempt for them to screw you over on these credits in that regard, because it does also mention self-employed people as qualifying. So I think the same rules apply to you as they do everyone else.
Okay. Let's see. I'll take this from Rich. It appears that the documentation required for sick leave would be relying on the word of the employee rather than having to rely on a doctor's note, etc. Yes and no. I think that as an employer, you can ask. It's not written that you have to have a doctor's note to show that they had symptoms of coronavirus. But the key is that they qualify for the leave. So they have to qualify under one of the 6 reasons for sick leave, and then all they need to do is provide in a written document a statement of the related reason for requesting the leave and a written support for such reason. Whether that's a doctor's note, I don't know. It's not clear.
Dana, if you don't mind, I'd like to just share just an additional thought on that point. I entirely agree with what you said, but I think when the other half of the question, which isn't asked here by Rich, is, or at least in my mind, when the employee is ready to come back, can we require them to have a doctor's note? Normally, my answer would probably be not or no, but there is at least right now on the EEOC's website, a Q&A about how the ADA and the COVID-19 interact with each other. And the specific question was asked is a bold question is when the employees return to work, does the ADA allow business owners to require doctor's note? And the answer is yes. So even though we may be allowing them to go out just based on their own word of mouth, depending on circumstances, we as business owners can insist on a medical release for them before we allow them to come back, and that would not be a violation of the ADA.
Right. And just so you guys know, the EEOC's Q&A is really very clear and very helpful for business owners. So I would definitely go and check that out. All right, we've got 5 minutes left. So we're going to cruise through the questions and then wrap it up.
I think I can take the next 2.
Okay.
So when does the 8 weeks for the triple P loan begin? On the date of the loan is approved or paid? It is on when you receive the proceeds from the loan. So you'll be approved and then you'll get funded. That's when the 8-week period starts. And then not trying to be tongue in cheek, really, if I can go over a time sensitive business, are there funds available? Yeah, and hopefully I didn't offend you with my comment there. I think there are funds available, and if it were me and I'm looking to start a business, you're probably, the EIDL loan is likely not going to qualify because you have to be able to prove how your business was injured economically in order to qualify for the loan. But there are really good SBA loans out there, and interest rates are really good right now. And I don't think those funds are dried up. I think they still plan on giving people loans on those things.
All right, then Dan, I'll read this last question here. My business is temporarily closed and I'm the only employee. My biggest concern is paying my landlord because I do not feel it should be his problem. Yeah, it's a tough situation. I guess I'm not exactly sure what the question is, but I know a lot of people are in this position where they're dealing with the employees who don't have work anymore, and they're having to let people go, or they're having to put people on furlough. But even once all the employees are gone, there's still financial obligations that business owners have that are putting a real burden on them for sure.
And the lens I look at that is from the triple P side, like they're saying we're only going to forgive the loans if you keep the non-payroll expenses under 25%. It sounds like if that individual got a loan and used it all for the landlord, then not all of the loan would be forgiven. Keep in mind, it does cover payments for self-employed people. I don't know the exact calculation they're going to look at for that, but your payroll that you've been paying yourself as the only employee would be included in that. And so if you're nervous about that, first of all, I would still say get the loan, because if it's not forgiven, it's 0.5% for 2 months. I mean, that is, they're trying to get your back. And I think it's really noble of you. It's not your landlord's problem. Just another perspective there, it kind of is. Because if you can't pay him, he doesn't have any income. If other businesses come in, like when this thing is all said and done and he's gotten rid of all his tenants, he's likely not going to be able to charge the same amount his current lease agreements show. So like from my standpoint, I have a gym and we have a landlord with the gym space, we just let him know, like, can we not, like, we're not asking for loan for like rent forgiveness, but is there any way we can not pay you rent while we're closed, and then when we're done, we'll add that amount up and just increase our monthly payments so that by the end of our term, you will have received the same amount of money. It's in their interest to help you. I know I mean, again, it's noble that you don't think it's his problem, but he does have incentive to help you stay in the lease agreement.
I love that, your answer to that, John, because a lot of people are in that situation right now. So that helps a lot to give them some idea. Let's just read this quickly from Mila. If an employee has already been laid off and qualifies and obtains unemployment with expected time of 4 to 5 weeks of unemployment, and then they get sick in that period, are we required to adhere to the Paid Leave Act on their normal wages? And do they still get unemployment? No. If they are not working, they are on unemployment, they do not qualify for any emergency paid leave. So with that, one more question, because I think this is an important one. I've heard it before on one of your broadcasts, John. I have somebody that asked, if I haven't filed a tax return in the past 2 years, then how do I prove my eligibility for these loans or the COVID payment?
You don't. You have to be current with your tax filings. You do not have to be current with your tax owed. If you owe back taxes, you still qualify, but if you haven't filed, you do not. You have to file your tax returns.
Yep, you do. Okay, any last words from both of you, and then we'll.
Well, I'll just share a quick thought again that I'm grateful, Dana, first of all, for you for setting this up so John and I could be a part of the call. I think this information is changing so fast that it's important to get it out to the people that we work with, our clients and our friends. And I just encourage everyone to stay in touch with John or Dana or I to make sure that any changes, you're aware of them, and just know that we're here to help.
Great, thank you.
And I just say, Dana, thanks for putting this together. I see a lot of people on Facebook and trying to do things, and there's a definite difference between people who are genuinely trying to help and those who are trying to profiteer. And I appreciate your approach of serving and just being available for your clients and business owners in general, because obviously business owners are the backbone of our economy.
Yep.
And we need them to get through this crisis if our economy is going to get through this afterwards.
We do, and we can get through it. So I just want to leave by saying that please make sure that you communicate well with your payroll companies and your accountants when you're trying to pay the employees the paid leave, because they won't know unless you communicate and send them the information they need. So as employers, you need to be gathering that. And you've got a couple of things that today's April 1st, right? It's the effective date. You've got a little leeway till the 18th. So have you disseminated the DOL poster? Have you put together, your COVID-19 policies? Are they ready? Have you communicated with your employees? So if you haven't, you need to do that. And if you have questions on being compliant, please contact Spencer or I or an employment attorney to help you. So thanks for joining us. We really appreciate it. And maybe we'll see you again. We'll see.
Hey, thank you, everyone.
See you guys.
See you guys.